You're watching Peace Country Presents on CJDC TV.
Welcome back to Peace Country Presents Lifestyles and Entertainment. Right now we're going to head down to H&R Block, where the owner has been in town for 29 years running the show. She truly knows anything and everything about taxes, and if you're like me, you could definitely learn a lot from this segment. Tax season is upon us, and people are lined up to let the professionals take charge. At H&R Block, owner Bernice McLellan's team of 23 take the time to find your best options.
I know for my office here, we do a really good job. We care about our people's tax returns. It's not just an assembly line, even though it sort of seems that way in tax season, but we always do the best job that we possibly can so that people pay the least amount of tax legally possible.
McLellan has been in town as a franchise owner for 29 years. With employees of 20 years, they are now more like family.
One of the ladies, her husband had an operation, just earlier this year, and we're all concerned. It's not, like when my grandma was really sick in Prince George, and it was tax season, it was April, I'm sorry guys, I'm gone. And they just looked, the staff looked after the business for me. I could get all teary.
With a solid team here at H&R Block, this is the crunch time for their industry. As waits are expected, the team recommend having everything and more you may need when coming in to file, including one piece of ID.
T4s, T5s with their bank interest, charitable donations, medical. Like a lot of people aren't aware that your eyeglasses, your dental work, your prescriptions, your massage therapist, your chiropractor, all of those are medical expenses. If you have to travel from Fort St. John, let's say, to Edmonton to see a specialist, that trip is a medical expense, and quite often we find people aren't aware of that. If you are, gathering up your papers and that, getting ready to go and have your taxes done, make sure that you bring everything that you think should go on your or could go on your tax return, because it's much better to have too much and have to take papers home than to not have everything that you need because you threw it out yesterday. If you give money to charity, like, to your church or to the Heart and Stroke or the Fort St. John Hospital Association, any of those places, they will give you a receipt that has on it www.cra, like a website address /charities, and it will also say on it official receipt for income tax purposes. So you need to make sure that you have those things on that receipt, and then you can use it.
So when you buy your first home, there's a homeowner's grant that you get on your tax return, and it's $5,000, and then you get 15% of that in your refund, so it works out to $750. And to prove it, you need to bring in your buyer's statement of adjustments.
Sometimes you're going to forget, but if you know for a fact that you belong to a union, there's no sense to even come in to get your taxes done until you've got that union dues receipt. Otherwise, the return just has to go sit and hold and wait for that slip to come in, and then you have to come in again. And, it's much nicer if you can come in, have your taxes done all in one shot.
The other vital document you want is proof of living up north for 6 consecutive months. You will receive a substantial amount for what is known as the Northern Residence Deduction.
How it works, just for the basic amount for living here, everybody qualifies for that as long as you've been here for 6 months. But if you're living in a household where someone else is going to claim for maintaining the dwelling, then you aren't going to be able to claim for living here. So how it works is, and this is so strange, you can have 10 roommates all sharing a house, and they all can claim the 1510 is what the amount is this year, 1,510. They can all claim that for living here as long as none of them claim the additional amount for maintaining the dwelling. Because as soon as someone else claims that additional amount, no one else can claim the northern for that house. What you can do is you can go to your landlord and they can write you up a letter. We actually have forms here in the office that we give people just to have the landlord fill out, verifying the dates that you lived at a certain address. The other thing is, if, like in your case where you own your own home, you can get BC Hydro bills or P&G gas bills. Cell phone bills don't work because you can get your mail anywhere.
Along with this rebate, you can also receive money for any moving expenses you may have incurred for your trek up north.
Well, if you flew, then you need your airline ticket. If you stayed in hotels, like if you drove across Canada, let's say, and you stayed in hotels on the way, you need the hotel receipts. But just with the moving, you can claim simplified, and that is you can have meals and kilometers if you drove without any receipts. And all that you need for documentation is a letter from your employer stating that the date you started working for him and whether or not they paid for any of your moving expenses.
McLellan sees one consistent error after tax season has ended, and the CRA does their review of returns.
Something that people really need to be careful of is missing income. Yeah, the CRA started a few years ago. If you missed income like twice, then they start and charge you a penalty of 20% of the missed income plus any taxes that you owe because as a result of adding that income into your tax return. If you worked, let's say, for 5 companies in the year and you filed your taxes with only 4 of the T4s, so you've missed one of the T4s, then CRA will, of course, find that in the summertime when they do the cross-matching. And let's say that it's a $10,000 T4 and this is the second time you've missed, you are going to end up with a $2,000 penalty plus the taxes that you owe because of that slip. It's huge. We've seen a couple of instances where people have had $40,000 T4s, missed $8,000 penalties.
If you know you have made an error, try to rectify it as soon as possible. But you also have a lengthy amount of time to go back into your records.
Oh, we can do a request for adjustment. You can actually adjust the tax return up to 10 years from when it was filed. They allow us to go back as long as we're going to get more money back.
McLellan suggests a calendar chart to avoid any missed income on your tax return.
What we recommend to, especially the young fellows working in the patch and you know, like some of them end up with 8 or 10 jobs in a year, right? And we recommend that they actually write it on a calendar. When they work for a different company, keep that calendar, or now with the iPhones, put it in your iPhone, and then you can go back and go, I don't have that T4. CRA is putting T4s online now, so most of the time we can go online and print off any T4s that they have, but sometimes all of the T4s aren't there until June or July. But you can file all year round. If you have a refund, there aren't any penalties. But if you have a balance due, as soon as you're 1 day late, the penalty is 5%, and then it's another 1% for every month, at the end of which you haven't filed that tax return, up to 17% penalties, plus the balance due, plus interest for the whole time as well.
You have until April 30th to file this year, so gather up your necessities and file on time to avoid any interest or penalties.
Anything that you think is tax related, make sure that you hang on to it because, like I said earlier, it's much, much better to take things back with you than not to have something because you've thrown it out.
Well, special thanks to Bernice and Darlene for having me down to H&R Block, and I can't tell you how much I learned from filming that segment this week. Your local news is up right now. Otherwise, have an amazing Easter weekend, and I will see you here next Thursday night at 5:30 p.m.
CJDC TV.